It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
The spooked number of real estate investors, they really do continue to be nervous right around the country. Many landlords are, as we speak, exiting and decided to leave the market, which is creating a number of new listings. That is great for first home buyers, but fresh ABS lending data, it does tell us that first home buyer loan volumes have dropped by 7.8% this month, and that is down nearly 15% from their peak. So that is interesting. There has been a lot of discussion around the government's decision to restrict residential property lending through self-managed super funds. The argument is that it helps first home buyers, while critics say that it reduces investment options. Do you think that this change fixes a housing problem or creates a new challenge?
Yeah, I think it probably just moves things around to a degree. We've spoken about rental changes and what those are going to do. I think it's going to create a challenge in that space. I think it also creates a challenge in that we're sort of narrowing the window by which Australians can invest in Australian property. That will be a little bit difficult. Obviously, residential is a very safe investment vehicle. Your more unsophisticated investors can look at. So it does make it a little bit difficult for people to invest money or capital into that space for sure.
Yeah, because one of the biggest debates is whether investors are the reason housing is unaffordable. It's that classic blame game. The argument being made is that Australia's biggest issue is the lack of housing supply, which we've been in for some time, and private investors provide a large amount of that rental stock. Where do you think the real problem then is sitting right now as a result of those changes?
Yeah, I've always been very vocal that biggest issue that we have in this country is supply and not having enough density in the right areas. So investors, in my view, actually are large contributors in the residential space to the upcoming pipeline of development, because not every development is going to be, sold out 100% to privates or owner occupiers. So we do rely on those investors to pick up the apartments or houses or whatever they might be in a development to get the thing moving and to actually start to get it out of the ground, because a developer until they've sold a certain amount of property are unable to do it. So taking that investor out of the market may actually have the opposite effect and slow things down, I believe.
Yeah, and a lot of SMSF residential buyers, they're actually providing these rental properties because they cannot live in those assets themselves. So reducing the investor incentives, it could mean fewer properties available for tenants, which in turn could put more pressure on renters.
Absolutely, it will, I believe. What is a little bit interesting is the government haven't shared their modelling on what will happen to the rental market with these changes that they've proposed or have, more recently actually started to push through. So I think that it's going to put significant strain on tenants. I also think if you look at the people that are actually building these investments and so much of it is important to get these properties out of the ground, we need international investment. And as the rules sort of continue to change every, 12 months, it is probably a little bit of a harder prospect for an international to want to look at Australia as an investment prospect. So many of the large, really dense developments are backed by Singaporeans and overseas investors that I believe, and in talking to them in my role, they're a little bit spooked by these changes that seem to pop up every 12 months.
Commercial assets could become more appealing for some investors. Warehouses, industrial properties and business premises still allow SMSF investment strategies, but they come with different risks. And we've talked about the leap from residential into commercial. Not everybody can make that jump, James. So is commercial property becoming a bigger opportunity for everyday investors? What do you think?
Yeah, look, I really think it is. From the amount of increased inquiry that we've had from people that are traditional residential investors that have, I suppose, an investment strategy that centres around property and bricks and mortar, they're now looking for in other directions than their traditional strategy. So the first changes that were brought forward in the reduction in CGT discount, those probably changed the investment landscape a little bit, where people started to look for yield. Not a lot of commercial property in Australia is negatively geared because the the banks or lenders tend to require a different LVR makeup. So what we've found is that a lot of people are looking to commercial property. People potentially need to get a little bit more intimately, I suppose, aware of the things that are different in investing in commercial property. You can face things like vacancy and things like that, but you will have longer tenancies. You will have a situation where your tenant will often pay outgoings and things like that. So your net yields are a lot stronger. This SMFS change also, we've found, will probably change the landscape a little bit. And where we're expecting to see demand is in owner-occupier property as well, because you can operate a business, have your premises in your self-managed super fund, and we think that that'll be a really attractive investment vehicle for a lot of people. It already is a very popular way for people to get ahead and invest in their own bricks and mortar, but we believe that will become even more popular with these changes.
I know that there is a similar thing, I'm just scratching my head trying to think of it, in the UAE, because Indians have something very similar, don't they?
Yeah, the Indian tradition talks about Vastu, and Feng Shui and Vastu are both thousands of years old. So they come perhaps from a different perspective, but they come to similar agreements on how the location of your home can affect the well-being of the family.
Yeah, because Aussies right now around the country, they'll be just sort of laughing at this saying, well, I don't think this is going to affect how I buy property. But just coming back to the Vastu for Indians, I know that in Dubai, I know this firsthand, that they will not buy property if that does not line up correctly. And all of the real estate agents in Dubai know that that is a big thing. They won't even take them properties if they've already flagged that. So it is a huge deal for people that believe in this. I'm not sure how big it is in Australia. It must have some sort of significance with the amount of Asians that are buying property, particularly the Chinese.
Yeah, correct. As a Feng Shui master, I've also worked a lot in the Arab world, and I have many students in Australia myself. So as this is an ancient energy system, so people always look for places where they are happy, where they feel there's great vitality. And a cul-de-sac is really considered to be at the end of a street where the energy can be stagnant. And that can affect long-term, not when you live there a year, but when you live there many years, it could affect some people both on health and well-being, some on finances, some on relationship luck. And there's a whole debate on that where we kind of focused on the Instagram post, because a lot of people really feel the effect of it and other people don't. But it's more when you are quite sensitive to energy, you will probably experience more that negative aspect of it. And especially the homes that are really at the end of the cul-de-sac, not just when you go into the cul-de-sac, but the house that is literally at the end of the street of the cul-de-sac, because that is called what we say a sharp arrow. So all the energy of the people coming into the street, the cars are hitting the home at the end of it. That's actually the worst place according to Feng Shui.
I'm just thinking of people in relationships that have had a relationship bust up, or perhaps they've got a marriage that has gone south, and they're one of those people right at the very end of the cul-de-sac. They're listening to you, Marie, and they're saying, I was wondering what caused it. It's bad Feng Shui.
Correct, but there's always in Feng Shui solutions. So one of the things that you can do to protect yourself from that sharp energy coming at you is to make sure at the entrance you put something in red. Red is considered fire element, and it kind of is a protection symbol. So it could be left or right from your front door, put a pot with red flowers or red carpet, or even have a hedge just kind of dividing between the street and the house, or even have your front door to the side of the house, because that could be a protection aspect of it. And, I always say Feng Shui is not everything. Your mindset, the way you live your life is also affecting you. So, Feng Shui is, according to Feng Shui masters as me, is like 33% of the results of your life. So it can affect you, but it's not everything.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
Yeah, you talk about buying something a lot cheaper. Even the retirees, they're looking at the unit market of Brisbane cashing out in Sydney. It's one of the real big surprises in the Brisbane market. Still hot, isn't it? So the units could become the strongest part of the Brisbane property market moving forward.
Yeah, I mean, I think that the high-end units particularly will continue to do that. And we also see the same with low-set homes, so single-level homes, because all the boomers are downsizing. And when you've got the wealthiest generation in the country downsizing, they generally go for something pretty bougie. Another thing that people forget is that that's a generation without a mortgage, so you can't hurt them by putting the rates up. And I think that's where the RBA, the government, is a bit remiss here, is that they're not doing anything by putting the rates up. My mother's a boomer, and I was only joking the other day. I said, imagine if the rates went up 5 more times. And she went, that'd be great. My fixed term deposits would be getting a better yield. Literally, they are the problem with the property market in that sense, because it doesn't hurt them. It only actually helps them. So I think you'll see that market really improve, even those dual generation or multi-generational properties as well, because aged care is absolutely stuffed at the moment. You're talking 18-month waits to get into most of the aged care places we are. So we're actually seeing people buy really nice units, buy really nice single-level homes or multi-generational, and they're actually putting their own aged care worker on, because just getting into any of these places at the moment, it's an 18-month backlog. That is probably the most bulletproof demographic or kind of property at the moment because of the demographic buying it.
Yes, and one of the biggest issues from your organisation has been the proposal requiring Victorian sellers to disclose their auction reserve price 7 days before auction. Boy, this has had a lot of commentary around this. You say that this may not improve transparency and could lead to sellers changing their strategy, including increasing reserves, moving away from auctions possibly altogether, or negotiating privately. Is a rule designed to make auctions more transparent actually going to push more sellers away from auctions?
We believe categorically it will do that. What the government's trying to do is to improve transparency and address underquoting. We 100% support that. No dramas at all with them to put together the blueprint. The unfortunate way in which they're looking to try and solve the problem is going to force things into areas that are going to be less transparent for buyers. So it's very frustrating. We put forward what we thought was a very reasonable and workable solution. Was the vendor had to confirm 3 days out from the auction that their reserve existed within the 10% advertised range. So if it had been advertised at 9 to 9.90, 3 days out, yes, the vendor says to the agent, I can confirm for you it exists within that range. If it's changed and now they want $1,050,000, then the advertised range would also have to change to represent that, i.e. $1 million to 1.1. Unfortunately, by saying it needs to be declared 7 days prior to auction, it essentially only gives the vendor and the agent 2 weeks to test the market. The reality of an auction campaign is it's dynamic right up to auction day. And so this is an overreach of the government to try and control what vendors must do. And it's really important to note, Craig, this is not a requirement of agents, even though they're trying to put the responsibility of agents onto the transaction. Vendors determine their reserve price. Vendors should have the right to manage that right up to and during the auction should they want to. So long as there's that definitive range that is confirmed to the market, we think that's fair. And unfortunately, the way the amendment bill has been worded, there's so much grey area and confusion around what this will actually mean. And so we believe what will happen is that people will move away from auctions being the most transparent method of sale, into other areas that are less transparent and essentially not as good for buyers.
And the REIV involved in providing feedback, you guys are talking about the changes, which include areas such as hardship payment plans, dispute processes and governance. With more Australians living in apartments now, are owners' corporations becoming a bigger issue for property buyers to understand? What do you think?
Yeah, absolutely, Craig. We are seeing an increased number of people living in apartments, not only in inner city areas, but there's significant growth in apartment living even in the middle ring and even regional Victoria. So it is something that we're working closely with the government to ensure we have the right legislative framework to be able to support owners of apartments, whether they rent that out, put it into the rental pool or own it and live in it. So making sure we have the right owners corp legislative framework is really important, as that's a growing part of the property sector in terms of how people choosing to live.
You've also highlighted that Victoria's housing market does continue to lag behind several other states with affordability pressures and taxation settings, which is a talking point on its own. Are policy changes helping, do you think, solve housing affordability, or are they making it harder to attract investment required, especially for rental supply?
Yeah, well, certainly on a rental supply basis, unfortunately, we have an environment here in Victoria where not only is there a lack of incentive for landlords to continue to provide their stock to the rental market, we've actually got an environment where it's a disincentive. The capital values of Melbourne are lower compared to some of the other main capital cities around country, including Sydney, Brisbane, Perth. So whilst we may look attractive from a capital or affordability point of view for investors, the challenge is the tax regime to be able to hold on to those properties and to want to continue to invest in Melbourne is just not there. And that's actually borne out in our research that shows unless things actually change in terms of the tax and regulatory settings for landlords delivering properties to the rental market, our research shows that they're going to consider other options or move into state. We've got a supply issue. We need to encourage private landlords to want to invest and hold and deliver the properties into Victoria that we need in the rental market, because otherwise the renters that unfortunately suffer. Price becomes higher, choice becomes less.
We are your local source for unbiased, expert insights into the world of real estate. We are not a real estate company. Our only objective is to help you better understand the real estate market. We connect you to the best real estate information across Australia. The Real Estate Podcast.